All right, so we are already live. Let me see. Maybe we need to give like a minute or two to some people to start joining.
Okay.
There is also always this little time that we need to see if everybody is online and so on. Then we start full power. Okay, cool. So Cynthia, it's telling me that we are good to go. So like, let's kick off this conversation. Well, the objective of this call is to have here Cameron from Darian Advisors, like to talk a little bit about how are Darian supporting like their business, their clients, managing like their infrastructures, the decisions that they need to take in terms of compliance, regulatory, infrastructure, payments, taxes and so on, how this impacts onto into their daily operation. So a quick note from myself: I'm Seb, founder and CEO of Skyline Digital. I have today here with me Cameron from Darien Advisors. So Cameron, if you might do like a quick presentation about you, would be awesome.
Yeah, of course. My name is Cameron. I'm a CPA partner at Darn Advisors. Our firm is a Web3 crypto blockchain focused tax and advisory firm based out of the United States, but we do work with quite a few individuals and businesses both in the US and abroad. We primarily serviced is, I would say reconciliation and reporting for cryptocurrency and digital assets, maintaining compliance for those set of assets in those jurisdictions, as well as helping clients understand, the tax implications or treasury implications of these certain movements. And then in addition, we help people, if they're on ramping, off ramping, the overall accounting, treasury reporting. Who we typically work with, we start off with a lot of individuals. I'm a DGen myself, so just a very nature of masochistic transactions on chain. But now as we've kind of grown and matured a bit, working with a lot more DAOs, investment funds, quite a few validators, miners, DAO contributors, Web3 participants. Basically, intersection of Web3, crypto, tax, and accounting is fair game for our firm.
So and jumping directly into the subject, like because you mentioned a lot of like Web3 players, right? The DAOs,
Yeah.
the foundations, associations, high net worth individuals, etc., etc. But do you see that with the increase with the trend of digital assets and with massive adoption, are you seeing like typical Web2 clients, Web2 businesses adopting crypto and blockchain technologies that you are supporting? What do you think? Um,
Uh, Most certainly. I think, one of my first segues back in was a client I worked with that was brick and mortar. They were doing consultancy work for regenerative works and carbon credit sequestration. And one of their clients actually was the same idea, but moved into launching a blockchain focused on that. So I think where that kind of the idea and why folks would migrate there is just the fact of things are easier. It's a way to incorporate further contributors. And I've seen on just a more kind of like ecological standpoint, like if we have the same idea of like wanting to save trees, it doesn't matter if you're in Brazil, you're in the United States, you're here or there, we have the same goal of commonality to raise funds for doing these actions. And it's something that we've seen even as we're traditionally like a Web2 business, being a tax firm, is we have contributors that are based overseas. Specifically in Argentina, and to pay them through trying to get dollars or to issue pesos, given the current economic climate, is quite difficult. So for folks living there, we send saved like USDC or Tether, which enables them to have access and liquidity in dollars that they wouldn't have otherwise. So it's something just that simple little switch to be able to incorporate people in that Web3 economy. I think will make more businesses get in there if they want to have global teams. Um, And then just from the fact of just like operating, conducting, and bringing more people into the picture, I don't see why people would not.
No, obviously, like, and we see even at Skyline more and more that our clients are using like our crypto to crypto payment solution, because like mainly when you have people like in Latin America or Africa, and obviously doing settlements like with local currencies with Skyline it's possible, but like as soon as most of these clients get like directly, for example, USD into their bank accounts, they would be basically screwed because of like the central bank policies of swapping for the national
Mhm.
currency. So yeah, like I totally see and agree with your point, which is like more and more uh, typical businesses are adopting stable coins to do like their international remittances for their team members. So
Yeah.
it's a very interesting point.
No, 100%. Because your alternative is, wire, and then you're taking 3 to 5% commission on the FX rate, or you're
Yeah,
using Wise, which is good, but then you're also subject to where they support, or then like Western Union, which is just a whole crapshoot entirely. So yeah, to pay people overseas, it's just, I mean, I think that's the biggest area where Web3 can really bring folks in. Apart from the DAO, the governance, all the overall missions of what DeFi is trying to do. 100%.
and you mentioned that since therein it's mainly like US focused, like what is your exposure, for example, to like the Caribbean islands, and how do you support like a foundation or projects that want to incorporate foundations in those jurisdictions? Like how what kind of other countries do you support, and like where are these people
Yeah.
coming from in terms of their geographies?
Yeah, when it comes to like reconciliation, accounting, understanding what happened X or Y with the asset, where it went, was it spent or contractor, we're pretty geographically agnostic. So we have clients that are based in Spain, France, the UK. We are US focused because, as you can hear from my accent, I'm an American. I have a US licensure, so it's a natural progression. But as far as supporting projects overseas or foundations, a lot of times it's very common to have a development company or a labs company in the States. It's easy to form, it's easy to attract capital, you can subject to a Reg D, do a pre-fund, and actually get the thing off the ground. Whereas trying to launch a similar S product, or sorry, entity is harder in other jurisdictions. So I think the US still has that favorable for like startup S culture. But then at the end of the day, if they migrate to a foundation company, a Cayman Foundation, Swiss, Liechtenstein, etc., there still is an interplay between one, the initial sale or granting from those assets offshore, and then back and forth, the remittances, payments, as that, DAO itself or foundational structure needs to make payments in fiat. So we play back and forth with that at the DAO level, and then we also work with investment funds or LPs that are based in, like I said, France. They're partners in an overall fund that wants to invest in the metaverse or NFTs in the States because it's exciting, right? And there still is withholding implications, reporting for foreign investors that want to participate. And then similarly, if there's a US company that's investing in a Spanish or UK development company, or they have a sister company to employ or deal stuff there, there's interplay back and forth that we do with, as well as handling the compliance for such.
So it seems that based on what you just said, like most of your clients where they struggle more, it's like with the reporting and obviously with the reconciliation of their payments, like potentially some of their DeFi actions that they do, etc., etc. So like usually, how do you put in place like a process that makes sense for those clients so they can have like real time accounting reconciliation, real time overview of their assets and their on-chain actions and so on.
Yeah, I mean, there's quite a few different tools. When it comes to reporting, there's like, for the financial reporting, there's Integral, Bitwave, Trace.finance is a fantastic company out of Israel I've been using some work with as well. And then there's Basel Solutions that just do, hey, we're spending here, categorized to contractor spend or dev spend, and then sync that into Xero, QuickBooks, NetSuite, whatever your accounting software is. As for tax software for reporting, as a firm, we use cointracking.info. It's less geographically gated, so we can generate reports for Canada, US, UK, most OECD countries, and also take positions when it's more mutable than like Coinly, CoinTracker, Awaken.tax, which are more retail focused tools. And that's just to get the actual tax reporting done. And then from the, remittances side, invoicing, off-ramping, at the firm we've used Request.Finance a few times. We've got a client of ours, Actual, that does the same thing. But then also seeing solutions, like Skyline, of helping people access liquidity, make payments, do off-ramping and on-ramping. And that's probably the biggest issue I'd say we face, our clients face, is just liquidity. They may have staples here, but it's a 2 to 3 day process to get that into fiat, but they have to pay their lawyer, their contractor, the development company overseas in fiat. So that goes back to the initial question of like, where can Web3 really help is, yeah, acceptance of other assets. But in today's climate, most of the business is conducted in fiat. People recognize fiat. They want to receive hard dollars or hard currency that they can then go spend at the supermarket, et cetera. So off-ramping solutions are critical. Off-ramping operate in both directions.
Yeah, like that's something that for me it's a topic that it's really easy to talk about. We see more and more that they are popping up like potential competitors to Skyline for payments mainly. But like the interesting and the niche part about like what we do and what we can offer, like for all of this for all of our clients, it's like the capability that you no longer need a bank account, right? Like
Yeah.
that's the key thing. And like with all the things that all the tools that we are currently building, like to support, for example, as you were saying, like the tax reporting, the accounting reconciliation, and the bookkeeping things for your own chain versus off-ramping transactions, and the capability of being able to do like all of that with one single action. This obviously it's something that generates value immediate, like not only for the treasury managers but also uh, like for you, Cameron, and for others that for other accountants, CPAs that might be interested in using this. But like just to understand, beside like the
Yeah.
part of the reconciliation and the bookkeeping, what kind of other challenge do you think that your clients are facing at the moment?
I think a lack of regulatory uncertainty is the biggest part of where we're at. I think most countries agree that if I buy an asset, I sell an asset, capital gain or loss. Great. That's a really easy, simple concept for most tax agencies and whatnot to understand. But then we start to get into different types of transactions that could be perceived differently. So if I engage, I prefer I provide lending through Aave. Yes, I'm committing funds into it. I'm generating like Aave wrapped ETH, which is then able to then earn interest or whatnot for the lending. But that actual trade, is it a trade? Is it a deposit? Is it collateral? We don't understand because the current the current tax codifications allow it. We throw in liquid staking tokens. You're buying something that could be rebasing in the form of, in the case of like Lido, like Steve, or in the case of Rocket Pool, you have something that's a different price. How do we treat that? Like I am staking, I'm participatory, but like what's the actual taxation that transaction or event? And it's something where I get asked that question a lot. Is I just wish like there was some sort of guidance because we can build around it. We can advise our clients. We can say yes or no. This fits within that norm. But a lot of countries have just kind of taken a hands-off approach, which is detrimental to the overall ecosystem because if we don't know how to do this, it discourages investment, it discourages participation because people are unsure where they get hit along the way. Um, yeah, and then even taking one step further of just like DAO treasuries or just like how people gain some loss within it. What is a DAO? Do I need a legal wrapper? Where do I incorporate? These are the reason why we see, the rise of, Liechtenstein, Swiss, Cayman, BVI, Marshall Islands, Panamanian structures because they don't want to deal with the challenges of it, which is fair. Just because the government has allowed them to, have the ability to pay, forbid, and feel confident with their reporting.
No, because like that the point that you mentioned, the having like governments being like hands off, it's I think it's like really important like to make sure that we can operate legally, right? And like most of our I assume that most of our clients, whenever they comes to a point to decide like we need to incorporate an entity like to do our validation or running a node or like to do investments in DeFi, whatever. It always comes to the discussion, the old discussion of are we going onshore, are we going offshore, right?
Yep.
And like, and I wanted to understand a little bit like how do you usually support your clients like deciding like in going one way or another way, and like usually what are the considerations that they take. It's like mainly like just regulatory framework, it's taxation only, it's like to protect their wealth. What is, how do you
Yeah.
address the client, and like what are usually the weights that everybody puts like to take the decision?
Yeah, I mean, I'm gonna talk with two flavors. So I'd say like being Americans, and then also people offshore, like with
Yeah.
both perceptions. So, operating as an American of why I would or honor offshore. I would say staying onshore. It's one of those things where if you set the path, if you comply, there's no audits or whatnot. You essentially get affirmation that you're conducting yourself in the most legal, tested structure, and things may arise in the future, but you know that if you've done a foundation or a non-for-profit company for 3 to 4 years, you haven't been audited, there's no issues, you conduct yourself, it's peace of mind. You also have the system, the power, and whatnot that's here. I think the biggest uncertainty with forming onshore the United States is from more of a security standpoint and just like the regulatory standpoint, and sometimes unsavory climates where we don't know if the next administration or the next chair of the SEC will do this or not. So there's kind of this ambiguity that disincentivizes investment because we don't know what's going to be in 1 to 2 years or even 3 to 6 months. It's very changeable and mutable, which gives a lot of people a lot of fear and trepidation. And where we see a lot of folks, going and staying on shore, I would say if you have some sort of altruistic mission, overall governance, trying to do good for the planet, communities, whatnot, I think the existing 501c3 nonprofit foundational structures are amazing for that because you can receive tax deductible capital from individuals. You can put that to a good use, and there's existing codifications and rules for that. Reasons why you may go offshore, I think it comes into more, asset protection, longevity, and continuity. We've worked with a validator that's on, Solana, Atom, Matic, and quite a little bit, and we're looking to migrate his validator operations offshore because we don't know what the tax situation is with regard to validation. Is this going to jeopardize his own personal liability because validating could be seen as participatory in its security? It's a lot of headaches, and I think a lot of organizations choose to do that in other climates just to reduce that worry. At the end of the day, though, FinCEN, U.S. Securities, FinCEN Securities will probably pursue far. It's the reason why, CZ got in trouble, although never really stepped foot in the U.S. He somewhat interacted with U.S. customers, which called into question. And as we all know, the U.S. World Police goes quite far. I would say in the outside of things is we've seen even anecdotally that folks based in the UAE, Saudi, other areas, or even within Europe, still see the U.S. as a safe haven for assets. So why hold here when I can hold investments or securities or assets, real estate, et cetera, within the United States, which is, comparably to other areas seen as more secure. So they're willing to take that regulatory risk to have more overall less geopolitical risk. And then, and that's the thing is, it's really, really hard to say, but I'd say like what forming a foundation does in finding a good attorney or locating offshore, it's continuity. It's just like you don't really have to think about it. It kicks the can down the road until regulatory things. It's just like you don't have to worry about it as much, although it takes more in 25 to 50 grand at minimum attorney's fees, ongoing compliance costs, and in moving an offshore environment as well reduces the cost of taxation. So your treasury can grow. You can distribute that. You're not paying a 10 to 20 to 5 to 30% on every single transaction, which allows more capital to be distributed, invested, and overall for the similar to a nonprofit structure in the States, but without the concern of that. So, yeah, I'm inclined to that certain projects should probably be onshore and not have to go down the regulatory burden or headaches or cost of it. But if you're a DeFi project or you have concerns about or validators, set yourself to more legal risks, I can see why clients would go down that path, or even just asset protection.
Because like one of the let's say the more typical patterns in terms of like the structures that at least we have been analyzing that our clients use, it's the typical BVI foundation, and then they have like the OPSCO, let's say in the US or in Europe and so on. How do you feel, or what has been like the feedback on these typical structures that or when you have, for example, Europeans like in BVI based companies, and then they work via the opco to the foundation and so on, what kind of implications does this bring to the table? And like, do you have been feeling like any kind of resistance? For example, if you have a member that is European on the BVI entity, does this is this creating any kind of implications long term for the person in Europe? What is your
Yeah,
feeling there?
I mean, the truthful answer is we don't know until we know, right? A lot of these things have been untested, whether it comes to regulatory standpoint, and I feel like we'll start to understand more from the EU and US perspective in the next 2 to 3 years as they try to pierce that kind of BVI foundation company corporate veil. And I would say like where folks should have more concern is in the case of more closely held projects. So we're talking 5 to 10, 20, where it could be deemed to be some sort of offshore corporate structure, then and just operating for the sole benefit of those parties. And where the stronger case is the further decentralization. Instead of having a validator set of 10, you've got 100, or instead of just like 10 or 20 token holders, you've got 100,000. So the more and more that it gets decentralized, it supports the overall foundational mechanism. It supports enough sufficient control over the entity. And these same considerations exist if you're onshore or offshore. In the States, you form a devco, you want to launch a non-for-profit. If you're part of the governing board of directors of this nonprofit, but at the same time also a CEO of the developing company, there is inter-party relationships where it could be construed that it's one or the other. So having that kind of arm's length transaction, that distance overall supports that. But then and that's the part of like making sure it's not for the sole benefit of a handful of selected parties, and making sure, and actually, which is it should be for broader decentralization. That's what the aims of foundation company for. It's the reason why you go offshore. And some of the risk though is when something is in that place, you form the US LLC, they're a partner. The reason why it gets complicated is if I went to form there, I'm either a corporation, I'm either a partnership, I'm either a nonprofit, but you're paying 21% corporate tax here, or you're subject to withholding tax on when you pass those profits back to people overseas, which opens up U.S. liability here in the States, and just gets really, really complex and mucky fast. And I would say like going to that just reduces that burden. And then certainly when you get paid from the overseas down, pay the tax in the States or pay the tax in your jurisdiction, pay where you're based because you're actually receiving the economic benefit of it. But where that monies are existing offshore in some sort of treasury, it's not really being deployed or whatnot, I can understand why you wouldn't want to pay tax because you're not using it for anything. It's just growing and it's magic internet money, so to speak.
Yeah. Like I was just doing like a quick search, and like in this October this year, like BVI was removed from the EU list of non-cooperative cooperative jurisdiction, which is like a very positive news for the ecosystem, right?
Yeah,
Like we have like so many European projects that have like this kind of setup, so it brings some clarity to this project. My next question for you is, how do you feel, or what is your experience for most of these foundations that are based mainly on offshore jurisdictions? How do they bank? Do they
yeah.
have like I feel that should be like the trickiest or the most difficult problem for them, which is a use case that we support like on a daily basis at Skyline. But
Yeah,
like I wanted to understand like how are you dealing that with your clients?
short, they generally don't. A lot of these organizations, the way they kind of get banked, so to speak, is through other solutions. Like a DAO could have a rain card, and that rain card gets a debit card that they can go out and pay and get an off-ramp solution and be able to access fiat. But the most common approach, and it's the reason why we still see this, is US, EU, whatever DevCo operating entity. They'll seed over tokens, whether it be stables, native governance token, whatnot. That development company sells those, recognize the tax liability, and use that to spend, and that's how they get that fiat off ramp. It's not a great solution. I think, like you said, is having the BVI, be removed from that list will open the conversation. We have a partner of ours, which is the Marshall Islands DAO. So at my DAO, they do something similar for now, like the Marshall Islands allows you to get a bank account, you get off ramped, and in that overall entity structure, so there are ways, but it's going to be a give and take where the BVI may need to disclose on the annual report who are the governing directors, who are parties to it. So that way it's not directly shared with the EU, but it could be shared, it could be out there as well. So
Yeah.
I think we're going to be, all these jurisdictions, they're still going to want to have some sort of some actual fiat presence or get to a bank account. Will need to either disclose or comply in certain fashions, because entities want to know where things. I mean, sorry, governments want to know where it's at. It's just at the fundamental. They want to understand who's got it, who owns it, who's the ultimate beneficiary. Because if there is a tax liability that's undiscovered, they want to make sure they can point it to somebody. Which is, I can understand the rationale of governments in that perspective. I don't sincerely agree, but I understand the rationale.
Yeah, like they're trying to close more and more the tax edging as possible. So like they need to find all of this information. And actually, and speaking of which, it's like, how do you handle FATCA? Because like as American, like FATCA compliance, it's a really important topic. So like, how does, for example, if you manage to get like a BVI entity foundation, for example, or Cayman Foundation, how does
Yeah.
FATCA plays into this?
Yeah, I mean, it generally depends on what type of entity it is. What are the rights? Do they exercise control of the assets? Do they have signing power? And it's the relationship with that individual and that BVI company. One of our clients, they formed a BVI just to hold the IP as well as their investments in various sub projects from an asset protection standpoint. But because it's controlled for the sole benefit of two parties, well, an LP, the GP, as it flows up in the partnership, we include it, we report it, we're reporting transactions back and forth, which are generally de minimis, but we still have to report and acknowledge that it exists. So that's the same thing with general FR, FinCEN reporting in FATCA, is that it doesn't really generate a liability, but you're just informing the government that these assets exist, they are located overseas, or these entities, you have interest in it, so that it's out there and reported. And failure to do so, results in pretty severe penalties. It is an informational disclosure. I don't know in the future what could happen. They could audit that. They could understand if that is potential liability, if there are shifting of profits. But making sure that, and it's even not with DAOs, you have a Canadian company, you're based in the States. Whatever payments back and forth between that need to be reported. And the idea behind it is trying to avoid a shifting of profits between, or basically tax between two jurisdictions. Maybe there's a favorable tax rate on this type of income in this jurisdiction. We're going to push it over there to pay less tax in this area. At the end of the day, tax is going to be paid when those amounts are spent or used or utilized. It's just a matter of, do we pay 25% here, 30% there, 45% there? And every single government wants to pull that, basically get their piece of the pie.
Yeah. And how do you think, do you think that if we start having, and this is the natural trend that it's happening in Europe now with MiCA, the US will also change, and so on and so forth. But how do you feel that the overall regulation will impact the long-term decision first on where should I establish my entity, like to run my operation, and if you believe that let's put it, for example, the example of Portugal, which is one that I
Yeah.
know quite well, that we saw like thousands of crypto individuals and high net worth individuals like
Yeah.
moving to Portugal in the last 2-3 years because like suddenly crypto tax was zero. How do you feel that regulation will impact onto the investment into certain countries? And like in the end, like what do you feel that will be like the next countries to be as a business and also as a crypto individuals to run
Yeah.
their operation?
Yeah, I would say, what I see in the future, and it's similar to even today with like economic, exclusive economic zones. With certain regions, certain countries, they want to incentivize types of investments. They offer preferential tax rates, preferential credits, preferential incentives to attract that type of industry. So we see today, Portugal, Puerto Rico, and the United States. We see, certain countries have 0% capital gains rates because they're subsidized by other means. Certain countries, have like digital nomad as visas. It's the same idea. They're trying to attract capital, talent, people to live there. And if I'm a digital nomad living in like Barbados, yes, I'm earning my dollars, but I'm taking those dollars and then spending those at local restaurants, local grocery stores. I'm paying rent in that country, and it incentivizes economic development. So what I see from an individual perspective is either granting visas for people that instead of like investment in property, and we saw this with El Salvador. buy X amount of, I think it's like 500,000 or $1 million of Bitcoin through an El Salvador exchange. You get yourself a residency. You can be based in El Salvador. Awesome. Not my personal choice of country, but for other people, certain. And I think we'll start to see these like either golden visas or investment by visa by holding monies in exchange, much like countries have been doing by you buy $500,000 of real estate, great, we'll give you a residency visa, or you want to start a business and invest this bunch of capital, great, we'll give you a visa. Outside of that, though, I mean, I think we'll see outside of like the OECD, US, Portugal, I think things has been in isolation as of late, but we'll start to see certain countries have preferential tax rates for people to decide or hold hold crypto that want to have favorable regimes. We'll see potentially with Argentina and Malay, like maybe he might say 0% tax rates in Bitcoin. Why? Because he wants to incentivize the use of Bitcoin, cryptocurrencies, foment the industry, and encourage that type of innovation within that. From the overall like company or entity side of things, I still think we're still going to see the Swiss, the Liechtenstein, the Panamanians, the BVI, the Caymans exist for the near to short term future, just because individual taxation pretty easy. Like I said, you buy something, you sell something. But when it comes to an entity, there's a lot more legal considerations than just tax. Is it security? To whom am I selling to? I need to make sure I'm not selling to people in Iran or Afghanistan or Zimbabwe, whatever that be. And there's a lot more compliance protections that those certain things alleviate, so they can sell their tokens. They don't have to worry about it and raise capital and conduct themselves on chain with a lot of regulatory worries. So I think for entities, it's more of a legal consideration than a tax consideration, because I do believe that even if you're a DAO, great, you have your treasury, you're conducting yourself on chain. All this money is out there, but at the end of the day, DAO participants, DAO contributors, DAO token holders are individuals. Those individuals reside in tax jurisdictions, and when they get paid or have earnings or make money, they're going to pay tax there. But should the DAO itself? I don't really think so. As long as it complies those aims and not just existing for some sort of megalithic, idea.
Yeah, like I like that you mentioned Argentina. Like, to be honest, I believe that, and everything that I have been reading, I think Argentina could be like literally the next place to be. Not only because like the current president, because the inauguration was yesterday. Not because the current president it's like pushing Bitcoin, but also because like there is already like a big chunk of population that it's working for international companies, and they are being paid in like in stables and so on. So like it seems that it's like a little bit of a natural move for them to be more open to crypto. And also like there is this idea of like they will start selling passports to attract crypto individuals to move in. So like I'm really interested in seeing like what will be the future here.
Yeah.
Look, I think we are like more or less close to the end, but um, I think, do we have any questions, Cynthia, at this point? I don't see any. So, like, I like to one of the last parts of these conversations. Usually, it's like to try to fit a little bit like what Darien advisors do with Skyline, and so we can also get like
Yeah.
some feedback from like what are your clients are usually looking for, because I think this is also like a moment for everybody that is watching also to learn what are the current needs. And as you know, like at Skyline, the main core product that we offer, it's basically like to allow any DAO incorporated or unincorporated Web3 business, high net worth individual to process like their payments in crypto to fiat, crypto to crypto, do their investments. For example, we recently launched this partnership with Backed Finance to access US Treasury bills. And we are always wondering, and this like, what do you think that beside everything that Skyline offers today, what do you think that they are looking for in terms of like integrations? How can we simplify the more their daily operation, potential new products? Like, what do you think that your clients are missing that Skyline or any of the other parties are offering and would be interesting to consider?
Yeah, I mean, I think some of the larger things, which I think it's not even just like an existing product that needs to be marketed or even used more, is the concept of OTC trades. You have a lot of projects or founders that want to get access to liquidity. They want to sell. They don't want to make it as market on chain or as visible, and these things, these transactions where I don't want to notify or scare or whatnot, but I also need to make sure I get liquidity and access to what I have and conduct yourselves in a more, I'd say, like not clandestine, but more, privacy centric. Like I don't want to know, or I don't want people to know what my trades are, and that's fair. Like people should be able to exchange person to person, much like what eBay was back in the day is P2P transactions were the initial start of crypto. You post on a marketplace, you send some PayPal deposit, they send back here, and that transaction gets facilitated. We've gotten accustomed through a centralized exchange, which is just that on steroids, or just conducting ourselves through dexes and whatnot. But I think having that more robust infrastructure on that perspective would be, from an asset protection or privacy protection standpoint, is huge. And I think on that too, I mean, other matters on too with what you guys have on the roadmap is getting access to more liquidity. Like my day-to-day spend, I'm not sending people stables. I'm not actually going out and using my wallet to pay for groceries. Most of the world, my Fruitero, my greengrocer, et cetera, like they're accepting hard currency because they're not part of that Web3 ecosystem and probably won't be for 5 to 10 years. So having a debit card that can, I can fund it with USDC, Tether, DAI. I can take that, I spend it to them, they get their, euros, pesos, whatever that be. We're both happy. I get to spend something, get access to liquidity. I can use it right then and there with my phone, tap and pay, and we're no worse for wear. I think that's where it could be a huge growth in the industry, where the first like forays into it were Coinbase's debit card, crypto.com, but having that ability to really, really make in-person transactions and not just pay my friend or pay the dad or pay my lawyer. It's on Web3. That's a way you can get people into the ecosystem. You said, oh, that transaction that was funded by USDC. How did I get there? Oh, that card, and it just starts the conversation for people that otherwise wouldn't be party to that overall ecosystem. Also, honestly, I think the first time we met two-step, I think the part of the roadmap that most excited me was loans, and getting access to liquidity from that perspective, and not just from the ability to, oh, I can use it, but the idea of like that's a non-taxable event. If I had to send you, $100,000 worth of Bitcoin, I lend you, put it in custody, you can generate me a fiat loan. You can go take that loan and go buy a mortgage, etc. I still lock it up there. I maintain my cost basis. I'm just generating liquidity against it or a line of credit, and that's a non-taxable event. I can still have my long position on the overall market, but I'm not sapped as I use that to go spend for things that are in the real world. So that's where I see there's a lot of growth in these type of events, is just being able to buy houses, buy cars, fund, invest. And if I want to put 100 grand up and take 100 grand and go put into a startup, I don't want to incur a taxable event. That also, if I have to, I'm probably less likely to invest because I'm going to have to pay 21% of the proceeds I invest in this business. So that's something I'm super duper excited what you guys are building on. It's, I think, honestly, the first part that just like pinged me from our initial conversation.
So the conclusion is that the three main things that you believe that your clients are looking for: it's first the cards, the second like the private OTC transactions. Like we
Yep.
see that a lot of clients, they are like funding like a Kraken account and then withdrawing to a wallet. Like all of these transactions, in the end, it's easily traceable because like even Kraken, you have like thousands of transactions on Kraken, but if you really want to figure out like where the funds come from initially, you can. So it's not
Yeah.
it's not that difficult. And actually, like it's a problem that we are doing like with some foundations, that they have their own tokens and they need to fund their yearly operations. Like
Yeah.
the money comes obviously from the token sale that they did. So like, but like if they start selling, like this creates a problem in terms of like a marketing perspective, and the price drops. So this is definitely something that we are looking at the moment. It's like, how
Yeah.
can we add Zkey to do OTC transactions?
Yeah.
Um, Cards, it's something that it's on the roadmap for ages, but like getting like a proper business card that it's like that accepts like that works like with BVI entities or Swiss or Europeans. It's always like the secret key, but
Yeah.
we hope to get that next year. And loans, obviously, like mainly, for example, founders. It's like founders that they launch a project, they have their own founder tokens that are being vested. Like there are people that are willing to kind of like doing these kind of deals. Like you get like these investors get like the vesting agreement as collateral. Then like the person gets the funds to do their life, to buy a house, to do an investment in another company. And then like once, if everything goes wrong, like the person exited in a zero tax event. If everything goes well, the investors will get their money back plus the
Yeah.
plus the plus the interest.
No,
Cool.
it's yeah, no, I'd say it's absolutely huge. It's something too, is like not even for like nefarious means, which is a matter of like privacy and privacy. I mean, it's integral, and I think the concept like, well, I'm not doing anything wrong. Why should I care about it? It's okay if it's out there and transparent on the blockchain, but it's a matter of just like, yeah, it's not today, but like, what about in the future? Or if I just don't want people to know, like people don't need to know them spending on this amount of transaction. And I think it's just a part of like we've gotten so accustomed through this like web 2.0 world of everything public and everything out there. But back in the day, when I was like on forums for random games or for random this, like everything was its own kind of subset community, and we had our own discussions. It was all closed and not open source and completely available. And there was a little bit more like it's like the idea of like speakeasies back during Prohibition in the 1920s. Like we can get together, we can have conversations and feel comfortable having conversations and you can have different conversations in a private centric and you would in a completely open forum. So just from an overall social mechanism, I think privacy should be very important. And then liquidity is everything. I went down this path myself. I have holdings in ETH and BTC. I was looking to we were making down payment on a home. What I did is I did so through a decentralized format using Aave, liquidity, and whatnot, other sorts of collateralized lending tools, but at a scale, it's different. I'm starting myself to risk with DeFi or with that, but like from individuals that have millions of dollars of withholdings, if someone wants to enter into P2P transactions and give you fiat and take on that risk, why shouldn't it? They can take that dollars and go invest in someplace else. So I think at scale, we'll start to see that more from the OTC lending, grabbing liquidity there. Right now, I think for most retail investors, those types of solutions work. They worked for me. But to really, really incentivize that movement, it just has to exist. We need a merging of the existing kind of TradFi type S products, whether it comes from
Yeah.
asset protection in Swiss banks or privacy protection, whether that be because those need to exist, but also doing so in a really cool Web3 sexy format.
And because like you said, you talked about Swiss privacy, which is also like a good thing, which is something that we try to bring that we are bringing to. We don't try, we bring that to the table, discretion as well. And one of the things that we noticed that it's really interesting, and there are not that many projects like doing that. It's offering like a kind of a white glove support and having somebody to interact with, because like this space is you always interact with the smart contract and the smart contract gives you all the answers, right? But like, do you feel that this is something that your clients really need as well? It's having like somebody that they can call to do the transaction if needed and so on.
100%. Yeah, it's something I think having, custody has like taken a bad turn because of all the exchanges and whatnot that came in of late because they, blended customer and operational funds and poof, goes FTX, goes, etc. But I think as we get into it, like having a white glove service, it's super important. I mean, I think about, we were working with a asset protection or an asset manager. I talked to them about a month and a half ago, but it's the idea is like, if I have my ledger and someone's holding a gun to my head, I'm going to enter in my code and there they have access to capital. If that seed phrase, disseminated, it's stuck in a, vault, or there's a multi-sig on it, or I have a trusted party that can use it, or a trusted party on that multi-sig, they can't get access to funds. And I think a lot of like founders and Web3 natives, and again, I subscribe to the mentality, not your keys, not your crypto. But the thing is that if push comes to shove and someone's threatening your life or steals your asset or whatnot, there it goes. So in the Wild West, there needs to be some protections. And the thing is, these things exist from the traditional world. Like Swiss banking, custodial banking is what banking used to be. You put your assets in the bank, it's protected. It's not reauthenticated. That's what a bank it's meant to be for a storage of value. And these things of having trusted advisors or trusted shards or through asset or protectional mechanisms, and it's a huge opportunity, just from today. But as we're talking family offices, investment funds, estates, trusts that look to have that continuity, not just today's transactions, but to have their 25 BTC or 1,000 ETH just set up, and they know that it's handled, it's taken care of. If I get hurt, I get maimed, I lose the device, it still exists, it still goes. And it takes, trust in that custodial provider, but there's people out there that have been doing this for centuries, so to speak. And why try to reinvent that, because it already exists. So yeah, I would say, like, if there's a huge need for it, without question, there's a huge need for it.
Cool, 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 cool. Cameron, do you want to add something new to something else to our conversation? We
I
have
mean, I
like
guess
5 minutes, like to we can just like try to freestyle the last 5 minutes.
freestyle. Yeah.
Yeah.
No, I think something that's, I would say, from a novel tax perspective, and this is again speaking as a CPA, speaking tax advisor, I think the coolest thing that's come out from the past 2 years has been LST, so liquid staking tokens. Historically, we had to deal with the question of, if I stake something, I claim the rewards I receive from the beacon chain, I potentially could be taxed. But in the case of the right LST, you're buying an asset that appreciates based upon the overall stake rewards compounded to it, which puts it into capital gains treatment from both the individual perspective, and defers an obligation. If you're just, I think staking natively with ETH is huge. And if you have a validator, your 32 ETH locked up, having a conversation with a tax attorney or the right person for both asset and tax protection services is huge. But an individual retail investor, LSTs are amazing, just because you get that tax preferential treatment. It's an easier case to substantiate than, oh, I claimed it, I restaked it. It's capital gains in nature, but the same days you're still claiming something. It's not an actual auto compounding mechanism. So that's one of the biggest levers we have. And then from the state's perspective, looking at cost bases, looking at which lots you sell, looking at how you're treating things, like actively, critically looking at your portfolio to what it is and what it constitutes, and just asking the question never hurts. A lot of people just want to comply, they follow the guidance, they don't want to get in, they want to sleep at night. But the best thing you can do is, much like with financial advising, with tax advising, anything, is ask the question. There's potentially an option. We can say no, but at the same time is, you could be missing out on yield or tax savings or opportunities that you just didn't have today. So just think critically, which is a lot to ask in today's climate.
Cool. Cameron, thank you very much for your time. It was a pleasure to having you here. You are actually the first attendee, or the first guest for our webinar series. So like this was also like a very good starting point. Like for everybody that it's hearing us or seeing us, depending on the channel that you are following, if you are having like any questions, points that you would like to discuss with us regarding like from Cameron's side, tax advisory and so on, we are going to drop the contacts of Darian advisors and the links on the YouTube channel. As of Skyline, if you are having any troubles like processing your crypto to fiat payments, or if you are looking like to invest with crypto like in any real estate property, or like in a traditional investment, or doing a traditional investment into a startup or whatever, just hit us up. Like we can easily support you like with your onboarding. We are fully regulated in Switzerland, which brings up like the privacy aspect and the discretion aspect that me and Cameron were talking before. So feel free to shoot out an email message, Telegram, email, whatever channel works for us. So guys, it was a pleasure today. Cameron, once again, thank you very much for your time. And let's keep in touch.
Thank you.
Thank you. Bye bye. Cheers.
Ciao.